I'm Emily Chang, and this is the best of Bloomberg Technology, where we bring you all our top interviews from this week in tech. Coming up, the coronavirus spreads across countries and continents. Markets tumble, investors grumble. We will have the latest on the virus impact on global supply chains. Plus, the passing of the torch at Disney. Bob Chapek, who oversees global parks, is named CEO. Bob Iger will continue to direct the entertainment giant's creative endeavors as chair. And early Facebook investor Roger McNamee joins us for an in-depth conversation from tech to the virus, regulation, and politics. We begin with the coronavirus and the outbreak spreading beyond China, from the Middle East to Europe and South America. In the United States, the first known case of unknown origin reported in California, just 2 hours north of San Francisco. The state is now monitoring thousands more people for signs of exposure. President Trump tapped Vice President Mike Pence with the task of overseeing the U.S. response. Flanked by members of his cabinet and U.S. health officials, Trump spoke from the White House Wednesday.
Because of all we've done, the risk to the American people remains very low. We're ready to adapt, and we're ready to do whatever we have to. This one is different, much different. This is a flu. This is like a flu. I think the stock market will recover. The economy is very strong.
But the markets were not all fine, with stock market swings pinned to the virus threat. Both the S&P 500 and Dow Jones suffered big losses this week, at some point as much as 10%. As for the tech sector and supply chains, Microsoft and Apple sounded the alarm. I caught up with Dan Ives of Wedbush Securities Thursday.
It's a major tragedy, the outbreak, but our view, and it's really been our view, especially over the last 10 years being bullish on tech, is that the exogenous events we have to look at and say, does this impact the demand longer term, and does this change the dynamic for our winners? And fundamentally, when I look at names like Apple and Microsoft and Amazon and some of the FANG names, even though this is going to be a very uncertain period and a lot of hand-holding, when we're on the other side of that, in my opinion, this continues to be stocks we want to be owning, even though you have to obviously factor in risk in the near term.
Facebook just canceled a conference that's 3 months away. You've got Microsoft pulling out of conferences. You've got Apple, Microsoft, HP cutting their forecast for the quarter. What do you think then the impact is going to be in the near term if in the long term you're positive?
Sure, I think Microsoft's a good example. Look at PCs, a third of revenue. Obviously have to take that off the table, but yet the 2/3, the cloud, Azure, a key part of the transformation of Microsoft, that continues to be something that they kept on the table. And I'd say fundamentally 70 to 80% of the valuation is because of that. So when I look at a name like Microsoft, that's an example. Like, they are definitely obviously going to be a victim of the supply chain, no different than Apple and any other PC player. But when I look out, I'm not talking the next few weeks, but when I look at a Microsoft, 9, 12, 18 months, is this a name that I believe continues to be the best cloud play over what I think is just a transformational growth trend? And that's why I continue to view this as uncertain and obviously scary headlines. You look at your winners, you look at the names that you, in my opinion, that list, and you selectively continue to buy them, during this just massive volatility.
Yes, Dan, you're not alone in that view. A number of analysts, despite what's going on, still rate Microsoft a buy, but it has slipped 11% this week. So I guess the question is, when do you buy? Do you wait for longer, or how selective do you need to be here?
Yeah, I can tell you, clients on the phone all day. Our sort of view is, you sort of do scenario analysis for the Apples, for the Amazon, for the Microsoft, and you pick your spots and you're selective, but you are continuing to sort of own these names and buy at these levels if you believe in the fundamentals, which we do. So this is one, from our opinion, it's not the time to go into the bunker. It's a time to basically look at your whiteboard, look at the names you wanted to own over the last 4 or 5 months, but the valuations ran ahead of you. Because when I look at a lot of these stocks, you have in 5 days, 6 to 7 months of games wiped out. So it depends which side you're on. Just like, there's obviously going to be the bears and obviously more the Armageddons. They're not going to be buying high growth. But in my opinion, this is more of a pause in still the long-term bull market for tech, rather than the start of a darker period. That's at least our view.
In the short term, however, I'm wondering if the risks around the supply chain are fully understood.
When Apple was the first one to fess up, and of course then Microsoft, I think it just that's something where the streets tried to get their arms around. But fundamentally, it's such an unprecedented situation where now the supply chain, to your point, it's do we start seeing normalization in March, April, May? And I think that's how you have to put the goalpost, because if we start seeing some normalization starting in March, then 5G super cycle remains. You'll have the 5G phones come out for Apple in September. And I think, but if you start to get into April, May, and later, that's where the supply chain, the impacts are going to be much more pervasive. And obviously, you're seeing a lot more of that reflected in these stocks as we continue to go through this volatile situation.
Dan Ives of Wedbush Securities. Coming up, Disney just got a new CEO, and it's a company veteran. We're going to hear from the new and former guards of the Magic Kingdom next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Disney named Bob Chapek its new CEO this week, landing him one of the most coveted jobs in the entertainment business. He replaced Bob Iger, who will remain chair. The timing of the announcement came just weeks after an upbeat earnings report, creating an air of mystery around a sudden transition that has been frequent parlor talk in Hollywood. I spoke to the two executives, Bob Iger and Bob Chapek, shortly after the news came out.
It's a great time to begin this transition. As you know, I was going to be leaving the company and leaving my role as CEO at the end of 2021. And so the board has been engaged in a process for quite some time, considering who best to succeed me. In Bob Chapek, we have someone that not only knows the company very well, having run a few of our really important businesses, including parks and resorts, but he's also someone that we know very well, and we couldn't think of a better candidate to take over the company at this time. In terms of why now, we, as you know, recently completed the acquisition of 21st Century Fox and have been engaged in assimilating those businesses. We also deployed a brand new strategy, our direct-to-consumer strategy, with ESPN Plus and Disney Plus, and of course now Hulu and Hotstar. And given the fact that our asset base and our new strategy is in place, my next priority was really making sure that our creative pipeline was as vibrant and as rich as possible. It's the most important thing at the company, particularly given the new strategy. But in order for me to concentrate on those creative pursuits or endeavors at the company, I really needed to turn over the reins to Bob, to someone else, so that they could essentially run the company day to day and free me up to do what I think should be the priority at this point. So it made perfect sense. It also creates a really smooth transition, given the fact that I'll be around to advise Bob when he needs it and to bring Bob into some of the businesses, some of the processes that he has not been as familiar with, and that gives me the opportunity, to spend the time during this period of time really working on our creative side.
So, Bob Chapek, day one for you is today. This is effective immediately. Obviously, Bob talked there about the streaming strategy. You've just had two hit sequels to Toy Story and Frozen. You've opened the Star Wars portion of the theme park. Where do you intend to double down?
Well, I intend to double down on the exact same strategies that Bob has established 15 years ago that have served us so well. At the core of everything that's at the center of our brand is really our creative storytelling. And if the creative storytelling is right, then everything else is right, no matter what distribution channel you put it in, whether you put it in the theatrical channel, whether you put it in Disney Plus, or whether you put it in theme parks. So the thing I've really taken away from Bob Iger's legacy is get the content right and everything else kind of follows suit.
So, Bob Iger, you said you're going to be focused on more creative endeavors. Can you give us more of an idea of what intrigues you most, ranging from Fox to obviously television, Star Wars?
Well, creativity abounds at the company, whether it's a television channel or a direct-to-consumer platform, or our various movie studios, or all the places that we create globally. There's a lot of creation that goes on outside the United States. So I don't have a specific priority, but obviously fueling the pipelines of our new direct-to-consumer businesses is very, very important to us, given how large a role they will play in the future of the company. But there's a lot to do, a lot of creative activity, which is what makes it so exciting and what I think separates this company from so many others in the business.
Now, obviously, it's a global business. Bob Chapek, you're going to have to get used to being in the hot seat and answering questions on a host of macroeconomic and political issues. The coronavirus is front and center. You've got theme parks in China. Can you give us an update on the status of the parks there, when they will reopen, and what life is like for employees?
We're not prepared to give an update on the impact of the coronavirus on our business, but what I will say is that when you've got a brand as strong as ours and tremendous franchises and built-in consumer demand, we know that when we're able to reopen our businesses, we'll come back better and stronger than ever.
So, Bob Iger, I have to ask if there are any other jobs out there that are of interest to you. Obviously, your potential political ambitions have been speculated about very much. What else might we see you do, if not at Disney?
I haven't made any decisions at all about what comes after Disney. I think I'm going to have to use my imagination to figure that out. Right now, I'm concentrating on the priorities that we've talked about, and I'm not going to take my eye off the ball until I actually retire from the company at the end of 21.
So quickly then, you're leaving at a time when obviously the coronavirus has markets in upheaval, a very competitive election here in the United States. Bob Iger, what is your outlook on sort of the macroeconomic picture in 2020?
Well, again, as Bob said, I'm not going to comment specifically about the impact of the coronavirus. Obviously, it's very unfortunate, and we feel for all the people who were affected by it. Overall, we thought that the world was quite a hospitable place for our company. As Bob mentioned, our stories, the storytelling of this company are enjoyed the world over. Our businesses are doing extremely well. The long-term prospects for our brands and our franchises and our businesses are, I think, at this point, looking quite good. We're obviously experiencing some very, very challenging times now, whether you're looking at the stock market or whether you're looking at just the global business environment due to this virus. But while we view this as a serious situation, we also know that it's not permanent, and this company has always shown an ability to rebound from some of the biggest challenges that it has faced, and this is one of them.
Bob Iger and Bob Chapek of Disney. Coming up, the rise of SponCon and how memes and influencers are helping political candidates get around the rules. That's next. Plus, later, can artificial intelligence detect new health threats before human doctors? We'll have all the details. This is Bloomberg. In politics, all eyes are on the South Carolina primary this weekend, as well as the build-up to Super Tuesday. This past week, the Democratic candidates sparred once again in the latest televised debate. We also saw Vice President Joe Biden trying to hold on to his lead in the polls in South Carolina. So far, Biden has been backed by strong support among African-American voters. To get perspective, Bloomberg's Paul Allen and I spoke to Applied Technonomics Senior Advisor and Political Science Professor Jeannie Zaino of Iona College.
I think this endorsement traditionally by Jim Clyburn is usually critically important. If we think back to 2008, it was instrumental in his support for Barack Obama over Hillary Clinton. And I know at this point it's so important for Joe Biden, who, as we know, has not been doing as well in some of the early states. Iowa, New Hampshire, Nevada, he came in second. That was his best showing. So for that reason, this is critically important. Clyburn is, really well respected, not only in the party, but in the African-American circles. And Joe Biden is looking at a state in South Carolina where 60% of the voters in the Democratic side are African-American. That said, it's 2020, and we are entering this brand new era. And I think all of us are sort of holding our breath to see, do these types of traditional endorsements even matter anymore? If you look out at Nevada, for instance, we saw the Culinary Union really very critical of Bernie Sanders, and yet many of their members sort of broke ranks with their leadership and voted for him anyways. So we're just not quite sure if these types of traditional endorsements matter anymore, but it sure mattered more than a decade ago when he endorsed Barack Obama, and we know that Biden is hoping it does the same for him in this really critical state for him in South Carolina.
Senator Bernie Sanders still the front runner nationwide. Meantime, Michael Bloomberg, the founder of Bloomberg LP, the parent company of this network, not on the ballot in South Carolina. He had a disastrous first debate. Some would say he improved in the second debate, but not enough. What are his chances of regaining some of the momentum he had before that initial debate performance?
You know, it is tough to come back from, difficult debate performances. He had a tough first debate. As you mentioned, he got better in the second debate. But he's not on the ballot in South Carolina. And we really don't know because he is running such a campaign like we've never seen before. Not just the amount of money he's spending, but the fact that he is not competing in these first four states. And of course, as we get to Super Tuesday, this thing opens up big, and a third of the delegates are going to be up next Tuesday. And so I think he certainly, because of the money he has and the name recognition, he has a shot, but it is an uphill battle for him. Bernie Sanders right now has a commanding lead. If you look at the delegate count over all of these other candidates, he's at 45 delegates right now to Buttigieg in second place, 25. It depends on what happens with Biden in South Carolina. There's 54 delegates at stake. That could put Biden over Sanders if he was to get all of them, which is unlikely. So they're going to be battling it out, and we're going to have to see what happens with all these other candidates, whether it's Mike Bloomberg, Amy Klobuchar, Elizabeth Warren, Pete Buttigieg, who are, in this moderate lane, so to speak, and yet we really, really there's sort of pressure on them at this point. It's a do or die moment as we get to Super Tuesday. You've either got to perform or you've got to get out of the race and let the two top front runners in, potentially Bernie Sanders and maybe Joe Biden or whoever's in that moderate lane battle it out after that.
Jeannie, in terms of do or die, Joe Biden's long been building up to this South Carolina vote. Just how resounding does his victory need to be here?
I think Joe Biden needs a strong first place finish. I really do believe for Joe Biden, South Carolina is it. Now, if he doesn't come in first, I think he will sustain through to Super Tuesday. But, this is somebody who did not perform particularly well in Iowa or New Hampshire, did a bit better in Nevada, but still far distant second to Bernie Sanders. If he can't win in a state where he has been leading, he's got this strong endorsement now, he's got lots of support on the ground, then people are really going to say, can he beat Donald Trump? And, of course, for Democrats, that's the key question. So I think this is critical for Joe Biden. And I would also add for Tom Steyer, who has spent so much money and so much time in South Carolina organizing. If Tom Steyer doesn't do well, he's going to have to step away.
Jeannie Zaino there of Applied Technonomics. The U.S. presidential candidates, meantime, continue to spend big online. A quick check of Facebook's ad library shows Michael Bloomberg, the founder and majority shareholder of our network's parent company, far outspending rivals on the social network, but followed by President Trump and businessman Tom Steyer. But these kind of big spending numbers don't tell the whole story, as the rise of SponCon, or sponsored content, has given contenders loopholes in online political advertising. To discuss, I spoke with Mike Schmidt, the founder of Dovetail, a firm that helps companies organize their influencer campaigns.
It's not really new to me. I've seen tons of activity on sponsored content across all the different brands that we work with. It's sort of what I expected coming into the election cycle. We've been preparing for it. We've been thinking about it intensely here at the team at Dovetail. I mean, we're a small company, so we have to, be nimble and think about these things more intrinsically, and we have to be really careful about, how we position ourselves in this space because we are kind of a neutral third party. But yeah, it's becoming a big opportunity zone for us. It's becoming a big area of interest for us, and then also, we also ask ourselves all the time, what are our responsibilities as a neutral third-party data company and then workflow company that kind of treats this whole ecosystem equally?
Well, and where do you draw the line? Where should the candidates draw the line if they are finding loopholes that are, to be fair, loopholes and, abide by company policies?
Yeah, I mean, the thing is that the answer to sponsored content is just there's two reasons. One is the rising costs in customer acquisition on platforms like Facebook and Instagram, and then also just like the diversity of advertising content. People want more places to advertise. So, at the end of the day, our strategy is to inform and educate, because at the end of the day, people are just going to do whatever makes sense for their campaign, and it's kind of hard to stop these things as a company like ours. But as the platforms like Facebook, they have more responsibilities to either crack down on content that's either fake or misinformation or fake news. And then specifically, there's also government agencies that also need to crack down on some of these issues as well.
Regulation is a theme that often comes up when discussing these matters. Do you believe there should be more? And which parts of this of SpongCon should it focus on? The platforms or the advertisers?
I think the advertisers need to be held to a higher standard. Of course, like if they're sending fake news, if they're lying to customers on purpose, there needs to be bigger fines. There needs to be more ramifications for those types of customers, specifically on Facebook, Instagram, WhatsApp becoming a new platform for advertisers as well. As we see more and more of these things come to fruition, we think about the responsibilities for Instagram, for Facebook to collaborate with government agencies across the world. You're seeing this activity in Singapore. You're seeing the activity in not only the U.S. with the U.S. election, and then furthermore, I think like Zuckerberg making his opinion in the Wall Street Journal. It's looking to me like he's becoming more in tune with some of these regulations. So I think that over time, this is sort of just the tip of the iceberg, and we'll start to have more and more regulations as we think about the future of this particular type of advertising. But in general, we're seeing improvements across the platform. Some people say it's not enough. Some people think it's on pace to change the industry. I think it's we can always do more. I'm an innovator. I have to think that way. So when I'm thinking about the improvements to the platforms themselves, how can we change the narrative for election cycles? How can we manipulate these platforms? And I want to make sure that what we're doing is helping the ecosystem. At the end of the day, we're trying to educate, and at the end of the day, we're trying to also think about how we can be thought leaders, and then ultimately, how can we get to the right solution? Because this is a tricky subject.
Mm-hmm. Is there a role here for machine learning and AI to combat all the fake news and the spammy accounts?
Of course. I mean, machine learning is a core piece of our pitch here at Dovetail. So I think about machine learning, artificial intelligence all the time, and I think about how everyone's sort of scared about the situations that we're currently in with machine learning, artificial intelligence. And I only think it's about perspective. I think it's about do you think that machine learning and artificial intelligence is going to make these things harder or easier, or do you think they're going to be, or do you think that we're going to have an easier way to collaborate in the future? I mean, deep fakes alone, sometimes I can't even tell the difference. So I think as we think about the future of data systems, data portability, privacy, more and more of these types of data systems, how can we be more educated as a society, and how can we start to understand these systems a little bit more? Because I think in general, people don't really know how machine learning works, or how data scraping works, or how obtaining data works in the first place. So, of course, data is a huge part of our business here at Dovetail. Workflow, data auditing, making sure fake news and bots all kind of work into the fold. But in general, what we find, especially through our surveys with the public, is most people don't know how this data is obtained, nor do they even know that Facebook is even, the same company as Instagram. So I think there's a lot of education to happen in the market at this point, and specifically around machine learning. I think they should be introduced at younger ages. I think that more and more people should know how these systems work, and then specifically how social networks make money.
Dovetail founder Mike Schmidt there. Coming up, how artificial intelligence could help prevent the next outbreak. We're going to hear from a health expert who's created an early warning system, the innovator behind what's called Health Map, next. And Bloomberg Tech is live streaming on Twitter. You can check us out at Technology, and be sure to follow our global breaking news network, Quick Take, on Twitter. This is Bloomberg. Welcome back to the best of Bloomberg Technology. I'm Emily Chang. The World Health Organization says there are now more new coronavirus cases outside of China than inside. This raising the question of what could have happened if governments had earlier warning systems. A mapping tool using AI developed by a team at Boston Children's Hospital was the first outside of China to flag the disease. At around 11 p.m. local time on December 30th, Health Map sent an alert about unidentified pneumonia cases in the Chinese city of Wuhan. But at the time, the system only ranked its seriousness as 3 out of 5. Now it's hoping to sound the alarm before new health threats emerge. On Wednesday, I spoke to Dr. John Brownstein, Chief Innovation Officer, who helped build HealthMap, about the potential for AI in future threat tracking.
Truly, what's challenging about public health issues like the emerging coronavirus is getting enough detail in real time about what's happening on the ground. There's only so much public health agencies can do, and for health systems to be able to track these cases. Now, if you think about the digital exhaust, right, like our interactions with social media, our search queries online, all of that information is incredibly valuable, but it's a huge, messy set of data. But if we start tapping into that sort of digital exhaust and get insights through machine learning and AI, you can pinpoint early events before they really get sort of bubble up to officials. So with coronavirus, the earliest signs actually came out of local media, social media sites like Weibo and WeChat that were talking about this mysterious outbreak that was only like a dozen people out of the seafood market in Wuhan. That ultimately became the major event we're seeing today. But again, what we're able to see is these small signals that would be challenging to look at from any sort of government entity.
So what's it telling you about the coronavirus then right now?
Well, of course, we've been using our tool not just in the earliest points to identify the outbreak, but to track it as it spread, right? So if we can start to map out cases as they are identified across the globe, we can quickly feed that information to modelers, make projections, understand case fatality. You know, obviously what we're seeing is a huge amount of cases that are emerging that, you know, maybe have not interacted with health systems. We know that there's a lot of cases that are asymptomatic. What we're trying to do is understand the spread in real time to prepare governments and populations for the ultimate sort of inevitable arrival of this new virus.
In terms of usefulness, though, Emily pointed out there that when it first broke out, the virus was only rated a 3 out of 5 of seriousness. By then, by the time it had become clear how serious it was, it had spread far and wide. So were there still some limitations to this as a tool?
Absolutely. You know, AI is just one of a series of tools that public health has. At the end of the day, it's really about the frontline workers, epidemiologists, public health experts that really need to process that information. In fact, we were communicating early on with the WHO about these events. They are the ones that ultimately make decisions about what kind of response to take on. You have to understand there are many clusters of respiratory outbreaks that happen on a daily basis that are unidentified. So the challenge of looking at this one event and deciding, oh, this could turn into a global pandemic, it's a real challenge. But it does spell the fact that these tools are identifying signals, they're getting communicated, and ultimately we've seen an incredible response both in China but on the world stage as well.
Yes, to your point, before we started today, I was playing around with HealthMap and I discovered that the neighbouring province of Hunan in China has currently got an avian flu outbreak. So how do we weigh the seriousness of that?
It's really challenging. And of course, even within the U.S. right now, we're dealing with influenza. We know flu leads to incredible mortality. There's still a big push to get people to vaccinate, right? And so there's a major sort of ability for us to handle a new virus, plus dealing with our seasonal viruses that have similar, if not even sometimes greater impact. And so, the point of these tools is to sort of provide visibility, transparency, hopefully encourage people to sort of take the right precautions regardless if it's coronavirus, right? The idea of hand washing, proper hygiene, all of these things are sort of baseline public health that, you should be practicing regardless of what kind of virus is around the corner.
John Brownstein there of Boston Children's Hospital. Well, artificial intelligence and self-driving cars saw a big investment this week. Toyota put more than $400 million into autonomous driving startup Pony.ai. The company's already launched a robo-taxi service in China and Silicon Valley. Bloomberg Television talked to co-founder, CEO James Peng.
In general, in this field, there's still remain to be quite competitive. I think in terms of the current race, Waymo, by launching its public-facing and charging services in Phoenix, Arizona. So I think in terms of commercialization efforts, it's probably perceived as a front runner. But I think the race is still remain to be very open.
There's this debate among all the companies that are chasing full autonomy about how they are judged and measuring progress. You test in both China and in the United States, which have very different environments. Where are you getting the best quality of testing miles? Is it in China with complex traffic systems? Is it in Fremont? Is it in Irvine?
Oh, I think each place has its uniqueness in terms of traffic patterns. In terms of the interestingness or the density of hard cases, I think definitely Guangzhou, China will probably get more happening during the daily routine of our testing. But in general, I think everywhere the traffic pattern is different, everybody's driving behavior is different. That's how we used these extensive traffic patterns to train our AI models to make it more universal and safer and more comfortable for the riders.
Pony.ai co-founder and CEO, James Peng there. Artificial intelligence is also helping to boost the imagination of consumers while they're shopping. Imagine trying on a pair of shoes or a necklace before buying it online. That's the main focus of an LA-based startup, Ventana, which makes 3D shopping experiences. I caught up with co-founder and CEO, Ashley Crowder.
We've seen that 3D assets give customers a better understanding of the product. So actually being able to see the product in 3D and even do a virtual try-on with augmented reality has proven to not only double conversion rates, but also significantly reduce returns, saving companies time and money. The issue is, to date, it's been really expensive and time-consuming to create these types of 3D assets. So at Ventana, we built a robust content pipeline to significantly reduce the time by about 80%. So helping companies save time and money in creating and distributing these 3D assets.
Now, making it look better online is one thing. Actually being able to virtually try on a shoe is a ways off, isn't it?
It's not. It's actually here today with the advent of all the new phones coming out this past year. I'm sure most people watching watched the Apple news release last year, which talked about the multiple cameras on the phone. That's all to do better tracking, to do virtual augmented reality try-on. There's apps today. If you look at Warby Parker, you can actually virtually try on a few glasses. The issue, though, has been helping companies scale. It's one thing to do it for 1 or 5 products. It's another to do it for 25,000. And when you look at companies like Adidas and Nike, they launch 25,000 products a year. And our software really helps people do this at scale.
So Adidas, Nike, Microsoft, Lexus, Mercedes, these are your customers. Give us some specific examples of how the technology is helping them.
Yeah, so a great example is Shaw Jewelers. They're a client we work with. They have over 4,000 jewelry products. There's no way they could hire 3D artists to recreate all 4,000. They use our software to digitize their entire line and have 3D assets across web, augmented and virtual realities. Another example, we started the company providing turnkey hologram solutions with our best-in-class technology, and companies like DJI would send us an 800 megabyte CAD file of their product. It's too big to put on your website, it's too big to put on a phone, and that would traditionally take weeks of a 3D artist's time to strip down and make it usable. Our software can do that in a few minutes.
So, the goal here is to sort of straddle the online and the physical world. Let's talk about the hologram. Again, something that has, for many, many years, seemed futuristic, but as you say, maybe closer than ever, if not here in some places. Talk to us about how your technology works in this instance.
Right, so when we started the company, their phones weren't capable of AR yet, there weren't headsets on the market, so we provided turnkey hologram services, and it's hardware that projects holograms, and we were creating all the content. And so of course, brands would want to leverage their celebrity endorsement deals and show off their products. And it was really, when we got to these products, every client from Lexus to DJI to Adidas, nobody had the proper 3D assets. And that's where we really saw this area to innovate and help automate with software. And so that's what we're really excited about now that we have all these other platforms that require these 3D assets like web, AR, and VR. We're helping people create and distribute those assets at scale.
Ventana co-founder and CEO Ashley Crowder. Coming up, we will continue our look at how the coronavirus is affecting global markets. Our conversation with Elevation Partners co-founder Roger McNamee is next. And later, Grubhub goes above and beyond its rivals, this time to compete in the food delivery marketplace. We're going to have the story. This is Bloomberg. Now to our continuing coverage of the coronavirus. As we mentioned, U.S. equities struggled to regain footing this week on threats of the virus to global supply chains and growth. Tech undoubtedly caught up in the crosshairs. I asked Roger McNamee, co-founder of Elevation Partners, about this. He is also the author of Zucked, Waking Up to the Facebook Catastrophe, now available in paperback. He joined me Tuesday.
This was a disease that they thought they had contained in China, so people were breathing a sigh of relief, and markets reflected that. And then it's broken out, and now we don't know. We know that this is more infectious than most flu-type viruses. We know that they're past precedents, like MERS and SARS. The problem is the last ones that we're comparing to all occurred when China's economy was a lot smaller, and when our lines of supply to China were less influential than they are now. So I think the market's reaction is the correct one, which is this is a setback. We don't actually know what it's going to mean, but if you're a tech company like Apple and your supply chain starts there and a big piece of your demand comes from there, you have to approach this with caution. We don't know what's going to happen here, and we're at the end of 12 years of market run, so we can't be terribly shocked if the market itself is a little bit fragile to a setback like this. I don't know that it's going to produce that, but I think smart investors are looking at this as the kind of black swan we've not seen for a while.
Meantime, you've got a rocky political climate here in the United States. The race for the Democratic nomination, Senator Bernie Sanders, confirming that he's been briefed by U.S. intelligence that the Russians are trying to interfere with his campaign. You've got the Vice President, Joe Biden, on 60 Minutes Sunday, claiming that Facebook is battling accounts tied to Russia, trying to attack him. Take a listen to Biden on 60 Minutes.
They're involved in this race and in my primary. They're involved going after me on Facebook. They've already been taken down because Putin knows me and I know him, and he doesn't want me to be president.
Roger, you wrote the book on Facebook. You've, in part helped cover the fallout from Russia's interference in the 2016 election. How well equipped is Facebook now, is Twitter now, to counter potential interference, continued interference?
Emily, I really feel as though I'm on a quadrennial version of Groundhog Day, because exactly the things I saw in 2016 that got me focused on the danger that Facebook posed for elections are happening again from the same people. The Trump campaign has a very sophisticated disinformation operation that it runs internally. There's a gigantic network that George Washington University has been analyzing of fans of Bernie Sanders that was created before the 2016 election. Nothing happened after 2016 to shut these things down. Facebook certainly did nothing, and so they continue to operate without any kind of constraints. And on top of that, you now have your boss, Mike Bloomberg, coming in with his own operation where he's just flooding the zone with all kinds of things. The result of that is, even if the Russians interfere, it's not clear to me how much impact they're going to have because there's so much noise already. The challenge is that this kind of stuff is really bad for democracy. We're not actually seeing real issues being debated at a point in time when it really matters, when things like climate change, when things like healthcare really ought to be commanding center stage. What we're actually seeing is lots of disinformation clogging things instead, and it's really too bad.
And we do have to mention, of course, that Michael Bloomberg is seeking that Democratic presidential nomination, and he's the founder and majority owner of Bloomberg LP, which is the parent company of us here at Bloomberg News. But I do want to ask you, Roger, to what degree social media and fake news are two sides of the same coin? Can they even be disentangled?
Not at present. I mean, Paul, the real problem that we're dealing with here is the business model, which is based on attention. The whole idea is, in order to command people's attention, you want to hit their emotional weak spots. And for most of us, that's going to be fear and outrage. And the best content for appealing to those things, the things that the algorithms surface because people do react to them most, are going to be hate speech, disinformation, and conspiracy theories. Exactly the things you do not want to have during a presidential election, frankly, during any kind of democratic election. And as long as the business model stays in place, Google with YouTube and its search engine, Facebook with Facebook and Instagram, and Twitter are going to be a clear and present danger to fair elections.
What sort of mark would you give Facebook and Twitter so far when it comes to addressing the problems that we had in 2016? I imagine not a terribly good one.
Well, I think Facebook has made many small changes, largely cosmetic changes, which is a lot better than what we've seen from Google, which has done, for all intents and purposes, nothing. And we have to understand that YouTube in particular, as well as gaming of the search engine at Google, those were huge issues in 2016, and nothing has been done to prevent that from happening in 2020. And then at Twitter, they've tried to do a bunch of things, but most of what they've done has not been helpful. And there are really obvious things Twitter should be doing, because journalism, politics, and celebrities all live on Twitter, and so disinformation there has an amplifying effect that's really dangerous, and Twitter just has shown itself to be completely incapable of dealing with it.
So, Roger, what's your outlook for 2020? Obviously, we've got the coronavirus happening. We've got potentially massive economic impact. We've got a U.S. Political election happening. We don't know how that is going to turn out. How does that impact some of these names, and especially big tech names that we follow so closely?
Well, I mean, Emily, quite clearly, the strategy employed by Facebook and Google in particular, where they basically take the position that they're equivalent to a sovereign nation and therefore should not be regulated by anybody. That has worked out fantastically for investors. And so the stocks, until very recently, were trading at highs. And so they, I think, are persisting in that model and are going to until some government shows that it's powerful enough to regulate them. And none has been able to do that to this point. What happens next, I think, is anybody's guess, because coronavirus, I mean, in all probability, it will turn out not to be the end of the world for us, but there is some measurable chance that 12 years into a market cycle, with China representing so much larger part of the supply chain and of demand, that it does turn out to be a big deal. And in an election year, if you were to have some kind of decline in economic activity, that's going to throw things up into the air. What is very clear to me is we are not in the United States on a path that will lead us to the best election we could have under these circumstances. And it makes me incredibly frustrated, because I've spent 3 years trying to call attention to the problem, because everyone, it doesn't matter what your political party is, it doesn't matter what your preferences are, we should all want to have elections be fair and be decided by Americans based on real issues, where we're really addressing what needs to be done, because there's huge economic opportunity in every one of these problems we look at today. But we're not going to get at that if we can't have a real honest conversation about what we should be doing.
Roger McNamee, author of Zucked and co-founder of Elevation Partners. Still ahead, Grubhub rolls out the perks to ensure its dominance in the food delivery market. We will hear from the company's CEO about the new launch next. This is Bloomberg. The food delivery marketplace is certainly a crowded one. And while many companies are slashing budgets to try to get into the green, Grubhub just launched a membership program full of rewards for its customers. But will it drive more revenue? I spoke with the firm's founder and CEO, Matt Maloney, Wednesday about his plans to grow market share with Grubhub Plus.
The Grubhub Plus program is an order of magnitude more exciting than anything that's out there right now. The free delivery, that's table stakes. What we're doing is 10% cash back, and that's incredible. That is a huge amount of money that we are giving to diners for ordering on our platform. It is an accumulation of the strategy that we outlined in our shareholder letter 6 months ago, which was about supply. We've doubled the restaurants. We have the largest restaurant network in the country, and it's about unparalleled rewards. We have over I'll say hundreds of millions of dollars currently available for redemption on our platforms through our Perks program, our restaurant loyalty and rewards programs, and then this Grubhub Plus, where we're giving 10% cash back. So we're really leaning into our profits as the only profitable player in the space, and we're leaning into profits to steal share from everyone else in the industry.
Still, your position in the food delivery market has been challenged by upstarts with big pockets, from DoorDash to Postmates to Uber Eats. How worried are you about the competition when they have a lot of cash at their backs?
I don't think they have as much cash as they used to have. As you know, the private market funding, or the private funding market for late-stage companies has really dried up post WeWork, and it's very hard to find equity investors to write a $100+ million check. We are profitable, so we can sustain this business for as long as possible. As we said in this shareholder letter, we are cutting back on our profitability to be more competitive and to do things like Grubhub Plus, where we're giving consumers 10% cash back. So we're really attacking from a position of strength, and while everyone else is slashing budgets to try to find profitability, and they're promising profitability later in the year, we have profitability, and we are giving away unparalleled rewards to consumers.
So, as you say, Grubhub has been profitable. You reported net income of $1 million on $322 million in revenue for the quarter ending September 30th. But as you just said, you're also willing to sacrifice profits. So are we going to see no profits? Are we going to see losses? What does that mean?
No, we guided the street. For 2020, we're going to make $100 million net profit. So, and that's arbitrary. I mean, we just said, look, we want to make sure that we can prove to everyone that we can still make a substantial amount of money while being as competitive as we can. So we pushed into non-partner delivery. We've doubled our restaurants. We're nearing 400,000 restaurants right now, the largest restaurant network in the country. And then we're doing these programs like Grubhub Plus, where it's free delivery, obviously, 10% cash back, access to elite care teams. We're doubling the donations for all the Donate the Change for Grubhub Plus members. It is an incredible experience that we're throwing everything against the wall. We're pulling out all the stops for consumers because we know we have the best platform and we want to prove it to everyone.
So let's talk about the competition. Obviously, there are a lot of players here. Many people have said that all of these players simply can't survive. Do you see consolidation in this business? And if so, what makes sense?
I think there's a lot. I'd say there's too many players losing too much money. And so something's bound to happen. And we've acquired 10 companies in the past 10 years. So acquisitions is part of our growth strategy. So by being as competitive as possible, by pushing the envelope and stealing share, I think we're creating opportunity to buy companies in 2020.
Grubhub CEO and founder, Matt Maloney. And that does it for this edition of the Best of Bloomberg Technology. We will bring you all the latest in tech throughout the week. Do tune in every day, 5 p.m. in New York, 2 p.m. in San Francisco. And Bloomberg Technology is live streaming on Twitter. Check us out there at Technology and follow our global breaking news network, Quick Take, on Twitter. This is Bloomberg.